What's up everyone, it's Karthik with MoneyVest. So Palantir did an incredible job with the overall earnings here, beating on expectations on revenue and EPS, coming in at a very strong number, with also at the same time with a fantastic earnings call. So we've got lots to discuss. I'm going to break down the earnings transcript from Ryan, Sham, Alex Karp, everybody who spoke during the earnings call. We had a couple questions and a lot of investor questions as well. So that's what we're going to discuss in this video, and also break down the actual numbers and the entire presentation as well. So Palantir reported net income of earnings per share of 9 cents per share, with the revenues of well over $678 million, with a very strong guidance for the company for free cash flows and GAAP profitability as well. Palantir, of course, has been a stock there's been a lot of debate around, similar to Tesla. Palantir was up after hours when the market basically closed. It reported earnings and it was trading as much as $27, up a little bit over 12% after the earnings were released. Now, I want to mention that I do have Palantir stock. So for full disclosure, I actually picked up Palantir at market open yesterday. So as soon as markets opened, I picked it up when it was trading right about $22 a share. So that was a good pickup in the market open. But my only regret is not buying enough. Right? So my only regret is not buying enough. So that to me, I feel like is an opportunity that I can kind of fix in the coming days and weeks. If we do see any type of pullbacks or drawdowns or any type of selling pressure on Palantir, I can pick up more shares. I do have a position, but it's not as substantial as some of the other positions I have. And that's the only regret that I have with Palantir, because the numbers were absolutely incredible. There were so many contract expansions for Palantir, as discussed during the earnings call, as Ryan Taylor, the CRO, the Chief Revenue Officer, pretty much mentioned. And also the overall mission for the company seems very direct, very bold, and very focused, right? The entire team seems to be very efficient and focused in their business operations. So starting with Ryan Taylor, Chief Revenue Officer, and it's going to be a bit of a summary of the earnings call, and then we're going to jump over to the earnings presentation, and then we'll talk a little bit about the technical analysis on Palantir. So Ryan Taylor says our revenue growth, excluding strategic commercial contracts, accelerated to 30% year over year and 10% quarter over quarter in the second quarter. Exceptional results are a reflection of a market that is quickly awakening to a reality that our customers have already known. We stand alone in our ability to deliver enterprise AI production impact at scale, and we are delivering these results in the face of an unprecedented enterprise AI opportunity. As noted by Sequoia, the revenue expectations from AI ecosystems infrastructure build out have grown from $200 billion to over $600 billion. That's the potential addressable market for revenue expectations for AI ecosystems in just 9 months, and this market could continue to accelerate, moving forward to almost $1 trillion or more in the future as well. While many companies can build prototypes, the leap from prototype to production is substantial, and Palantir has made that leap. And our focus is on deploying enterprise AI production, solving meaningful problems for our customers, and we are uniquely situated, and you see that in our results for Palantir. And last quarter, we signed 27 deals worth over $10 million or more and closed nearly $1 billion in total contract values. And one of the most notable indicators of our delivery is the volume of existing customers who are signing expansion deals. So companies that are coming out there and expanding their contracts with Palantir, many of which are a direct result of AIP. And we continue to see the greatest transformation in our U.S. commercial business, evident in the many AIP-driven deals closed last quarter. Our U.S. commercial revenue, excluding strategic commercial contracts, climbed 70%. Panasonic Energy of North America signed a 3-year expansion using AIP across finance, quality control, and manufacturing operations. AARP shared their utilization for AIP to provide targeted, personalized experiences for their 29 million unique visitors on a monthly basis. Kinder Morgan signed a 5-year Foundry and an AIP enterprise expansion with the production use cases including storage optimization, pipeline integrity monitoring, and power optimization. And these are just a handful of significant expansions last quarter into production with AIP, and the magnitude of expansion is notable. So a lot of companies expanding, which goes to show that this is working. This is working for a lot of companies, and some of these companies are doubling and tripling revenues year over year, which is actually very, very good to see. So a major North American industrial company started working with Palantir in late 2022, expanded to a $5 million run rate in 2023, and further deepened engagement to a $20 million run rate this year. That's a 4 times increase in revenue by implementing Palantir into their operations. One of America's leading hospitals began working with us in 2021, generated, and just listen to this, generated approximately $1.5 million revenue in 2022, scaled that up to $4 million in 2023, and it's now on track to doing $15 million this year. Track to generate nearly $15 million of revenue this year in 2024. Absolutely incredible. I mean, when you see these types of growths, of course, companies all over the world are going to be interested to learn more about what it is that AIP does, what it is that Palantir does, and there's going to be accelerated in contracts that they're closing. They closed a 7-figure deal with large wholesale insurance brokerage firm for initial production automated policy review, use case just 16 days after the boot camp that they had. Looking ahead, Ryan Taylor, the CRO, I've never felt more bullish about our business than I do today. We're charging full steam ahead, leading our customers across the bridge from prototype to production with our ever-expanding product capabilities, laying the path for that journey. Alex Karp, CEO, so he takes over on the call and he says, and I quote, "We built the infrastructure you need to move from self-flagellation, PowerPoints, and prototypes flawlessly into production. Production meaning your enterprise gets faster, it runs better, margins are better, people inside the enterprise become more valuable, and your tribal knowledge in your enterprise, the knowledge which differentiates you from your competitors and all the other enterprises, becomes truly valuable. It becomes a weapon in your hand, whether that weapon is in the commercial context, to understand how to do things better than anybody else, work better than anyone else by making engineers better, making your workers better, and be able to do things that you wouldn't necessarily be able to do, and by targeting your company as a portfolio as opposed to a dots on a PowerPoint." He says, and I quote, "We believe, and the numbers now show that we were right about doing this. We could give America and its allies a structural advantage in the commercial area, which we have seen and our numbers prove, and arguably even more importantly on the battlefield, which we can't talk about much, but that's an absolute important area where America and its allies need to have dominance and leadership, that we had a structural advantage." And, when it comes to warfare, battlefield, I think that's where Palantir also substantially grows. There's been a new launch for Palantir as well called Warspeed, which of course they talked about during the earnings as well. And what is gratifying about this quarter and in general about what we've done is not the banality that we were right in the playbook, but it is that you can build a great business, be aligned with America and the West, that the alignment will make you stronger and better, that your software products will actually be products and not PowerPoints, and that you can actually build something with the best people in the world, the best investors in the world, will lead to structural advantages. Of course, all along the way, he says, we had many doubters. We had people that thought that we could never be profitable. We now have over 7 quarters of profitability. We thought that people would never be able to grow the revenue. And because of that, the best times for this company, and this is actually quite interesting and very, very bold claims, the best times for this company are not in the past. I would say the single most interesting thing about this quarter, if you had to reduce it down to one simple fact, after 20 years, after changing the way people do intel, after changing the way battlefield works, after changing the way people procure software, after exporting our platform to our allies, after punishing our adversaries, and after building commercial business, after seeing it all accelerate, the best times for us are yet to come. This was Alex Karp, CEO of Palantir, and we are planning to just take our energy and run this business as a business of which we are owners. We are owners with a very long-term focus on the best interest of our country, our allies, and our Palantirians, and our investors. And last but not least, the world is on the precipice of what could be a very severe set of violent interactions in the Middle East. And America has many businesses that are very, very, very strong and agile. So they're learning very, very quickly. And then much like people watching this call, they're like, okay, this is working. This is working, and our customers want to see production in more detail, and also again integrate Palantir and how we can help them grow revenues, cut costs, and at the same time improve their business and be more efficient. And that's how they're generating that 70% number, which is a jaw-dropping number that's being generated by companies. And they're like, okay, this works. How do I expand? And explain to me how it's working. Can we expand these things? And by way, our innovation also, because we're like, okay, this works, but this could be 5 times better if we had different kinds of innovation that no one else has. And finally, the last thing that Alex Karp mentioned for retail investors, for individual investors, he says, thank you for your support. They've had good times and bad times. This is a super important time for Palantir because we have proven to the world that we do is quantifiable and real. We are focused on growing this company to be more impactful, much larger, and much more valuable. And we appreciate your support. And we know that many of you also support us because you realize that our values are aligned with your values, and which means fighting to make the West a stronger and a better place, including on the battlefield. And that battlefield is maybe upon us now. And we now appreciate your support and do what you can to help America and help our allies. So very, very bold, I would say, conference call. There was a lot of really just kind of restoring confidence and really giving us a reason, right, for Palantir to be one of the greatest companies in the world. I mean, right now still trades at $58 billion market cap, but this right here were the numbers. Closed over 27 deals, over $10 million, over $1 billion in total contract value. Commercial revenue up a little bit over 55% in the US. Government revenue up 24%. Overall revenue up 27%, 7% quarter over quarter. GAAP profitability coming in at $134 million, which is a significant increase on a year-over-year basis. 20% margin there. Operating income to $105 million, a 16% margin there. And free cash flows with a 22% margin and $149 million in free cash flow, with adjusted EPS up 500% for the company. And again, adjusted EPS grew 80% year over year as well. So Panasonic Energy, we went over that earlier. We went over Tampa General Hospital, one of the top-ranked hospital in America. We went over that as well. Q2, Palantir signed a new 5-year, $480 million contract with Chief Digital and Artificial Intelligence Office, CDAO, to scale their AI and ML capabilities across the U.S. Department of Defense. Here are some of the numbers again. This is one of my most favorite charts as it's becoming more profitable and GAAP profitably now $134 million. And if you take a look at where Q2 of 2023 was, $28 million, and from first quarter 23, $16 million. So they have essentially 10x, almost 10x in the amount of GAAP net income for the business. Operating income also moving in a straight line up, moving to more and more profitability there. And Rule of 40, which is referring to the sum of the revenue growth rate as well as the adjusted operating income margin for each quarter, 64%. So they have been achieving over 40% rule for a really, really long time. So not only is their growth accelerating, their profitability and their margins are also really, really high. Commercial revenue growth 33%, U.S. commercial revenue growth 55%, government revenue growth 23%, U.S. government revenue growth 24% overall, and total revenue up 27% to $678 million, and aggressively increasing their adjusted operating income and margins as well. Customer count to 295, that's up 83% year over year and 13% quarter over quarter. Customer count 41% to almost 600 customers, and commercial customer count 467, up 55% year over year and 9% quarter over quarter. 96 deals of at least $1 million, 33 deals of at least $5 million, and 27 deals of at least $10 million or more. $4 billion of cash on the balance sheet with practically no debt. So one of the best balance sheets there. And this right here is the actual guidance from the business of fiscal year 2024. Revenue between 2.74 and 2.75 billion. Adjusted free cash flows of 800 million to 1 billion. Income from operations just under $1 billion. And GAAP operating income and net income in each quarter of this year, with the next quarter numbers expected at around $233 to $237 million in adjusted income from operations, with revenues just about $700 million for the company. So that is, again, one of the best earnings I have seen, lately. And Palantir, for the right reasons, pushing higher. And one of the only regrets I have for Palantir is not buying enough, not buying more when I should have. I do have a position, but it's not as substantial as what I would like it to be. And this right here is the after-hour spike where Palantir essentially jumped a little bit over 21% at one point, came down a little bit to be up over 12% from its close on Monday. And we'll see where it opens in the next hour. But overall, I would say this was one of the most amazing earnings presentations and calls and results I have seen this earnings season. Now, coming back over to some of the analysis here. So, a lot of you would try to understand, what's the valuation for Palantir, because if you try to assume that, we're working with, let's say, a 20% margin on the profitability on the bottom line here for the company, and the company is doing $2.75 billion of revenue. If you apply a 20% margin, we're looking at $550 million. $550 million of net income, of bottom line, right? So that's going to be the potential net income for Palantir on a 2024 basis. And if you take $550 million and then look at $55 billion, right? That's the current market cap. You're looking at a price to earnings multiple based on 2024 of over 100, right? Because 55 billion is going to be a pretty big number. So if I do the math here, let's see, $55 billion. So yeah, so that's going to be a little bit over 100 times, considering that 55 billion divided by, I just want to make sure that my math is right. I'm doing some mental math here. Let me just bring that up. Okay, so there we go. Let's see. So that is going to be the current market cap here. So we got millions, a billion, perfect, and then 550 million. 1, 2, 3, 1, 2, 3. That's going to be that number. Is that going to be? Hey, yeah, so 100 times. Okay, so my mental math, I was there tripping out for a minute. So yeah, 100 times earnings multiple for Palantir based on 2024 numbers. And if they're able to, let's say, accelerate this to over $1 billion next year in 2025, and let's just plug that number in. So now we're looking at just 1, and then these numbers are going to turn into zeros. Then we're looking at 55 times earnings multiple on a forward basis. Because if you come over to our platform, fundamental analysis, analyst estimates, we're looking at the growth rate, so 34 cents per share, and 2024 basis, 71, 72 times on a forward basis. But again, the market cap did spike after hours over 12%, so this number will go up. And then 2025 basis, you'll notice that it trades at just under 60 times forward price to earnings multiple. And then it, of course, comes down as time goes on, as the valuation kind of catches up to the entire growth rate. You'll notice that it actually comes down from 71 down to as much as 22, 23, 19 times by 2030, 2031. And the growth rate, again, around 20 to 30%. But since it's actually a company that's turning the corner towards profitability, the growth rate, I feel like, is a little bit more understated. And it can be well in the 60 to 70% over the next 5 to 7 years, as we are seeing so much acceleration with artificial intelligence and Palantir solving so many complex problems around the world, and there's a lot of adoption for Palantir's AIP software. So that being said, of course, for some people, 100 or 70 times earnings multiple could be very expensive, could be a multiple that they don't want to touch that stock because it's too overvalued or it's too expensive. But you really have to account for the future growth for the business as well. And oftentimes you will find that growth companies, growth stocks in general, trade at very expensive valuations to begin with because the markets are pricing in for that future expected growth in those companies. So for me personally, I mean, at $24, $25, of course, it's trading at 27 here after hours or pre-market when the market opens in an hour. In and around those levels still puts us at a price of close to 100 times earnings. So it's really just a question for every single investor that they have to ask themselves, are they comfortable paying 100 times earnings for a stock like Palantir, where there is a lot of potential for growth, or would they rather look for something that's already trading at a relatively cheaper valuation? And that's one of the reasons why I wasn't never able to, or didn't really want to build a substantial position in Palantir, even though I have, and I'm up on that position. I don't mind picking up more shares, but the risk reward continues to be asymmetric for the long term, where the risk reward is that, at $24, $25, the bankruptcy risk is really low because you've got plenty of cash, $4 billion of cash with little to no debt, and the long-term potential for this business continues to be very, very strong. So the risk reward continues to be asymmetric, albeit at a valuation that is, or arguably could be considered, a bit more on the higher side. So for me personally, the plan is simple. We'll consider the dollar cost average slowly and steadily at better values and better days. If there is any more red, we'll continue to maybe sell some puts or buy, or even I did an example of buying leaps on Palantir, which I'm sure are going to do really well I did that video just a few days ago, so definitely do check that out. But that's your entire analysis on Palantir. Let me know your thoughts down in the comment section below. And what do you think about this business? What do you think about this company? And what did you make of the earnings call and the earnings transcripts overall? So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. Support level is going to stay put inside this green rectangle for Palantir in the $19-20 range, and resistance all the way up to $29 for this company. As always, happy investing. I'll see you all in the next video.